Hey traders, checking in on the stock market today. A little bit of weakness in the tech sector, but financial sector hitting all-time highs offset it. We're scouting daily higher lows, and we're looking towards earnings starting Friday and rolling into next week. Let's look at the chart.
Introducing the Chart Guy's Swing Report, a weekly digital publication that uses technical analysis to identify long-term market opportunities. Understand the market from a swing trade perspective. Follow institutional money as it rotates from sector to sector, and make the most of the Swing Report's weekly trade opportunities, with key entry and exit levels provided. Performance is tracked and updated weekly. For more information, visit us at chartguys.com. Now, let's check out some charts.
So I got a cap from StockTwits because I did well in their charity poker tournament, and they sent me some books, how I invest my money. I do like Josh Brown, one of the only people I can stand on CNBC, and Unknown Market Wizards. I don't have enough time to read these days, so I'll probably give these away to some Chart Guys members. I'll probably read Josh Brown's book and then give them away. This hat's way too tight. Let's look at charts. So, bulls in control is the bottom line. We had a point where the tech sector started showing us a lot of weakness. And the first thing I do is look at the other sectors, and XLF was at all-time highs and at the high of the day. So I knew that weakness was unlikely to see follow-through unless XLF joined, and it didn't. So we're looking at SPY to change the hourly trend back in favor of the bulls, which would mean holding, if it were to shape up tomorrow, holding the low of today, breaking the high of today. Hourly trend change means daily higher low is likely established, and then we're looking back at the all-time high. So Friday, we have the first of the financial sector earnings into the following week. We do not have trading this coming Monday. And then we have earnings the following week. Netflix is the first for the tech sector, and that's going to be on the 19th, which is a Tuesday, so a week from today. And then we'll look at the rest of the tech sector after that. The tech sector right now is seeing a lot of daily bear flags that confirmed. So Netflix is an example of one. Facebook had a lot of weakness, with its bear flag confirming. Still a lot of weakness in Facebook. We know Twitter has been the star of some drama. It's been fairly weak. Who else? Amazon held on well today, but it also had a little daily bear flag that confirmed. Google and Apple are standing out a bit stronger than everybody else. So I'd put Google and Apple over here, and I'd put Netflix and Facebook over here, and I'd put Amazon in the middle, more so towards the right side, the weaker side. But it's going to be key to watch, and you could just say, well, this is continued selling off in anticipation of the Democrats having control of the Senate and the presidency, and that may be the case, and we'll see if it's a buying opportunity for earnings or not. That all depends on what the earnings reaction is going to be. I personally do not hold positions into earnings. It's not my style. I do not like the coin flip aspect of things, but SPY scouting a daily higher low. You could even call this a bull flag still from where we came from, at 364.82. IWM, all-time highs, extremely strong. So had a little bit of a pullback the past couple days, hardly anything. Yesterday was a daily inside bar, strong close, all-time high today. QQQ is where the weakness has been, but even then, anything above 305.18 is a daily higher low. So our line in the sand support level maintained. XLV has been a lead bull at all-time highs. It started its consolidation today. It was the weakest of the major sectors. QQQ joined it. XLF did not join them. So we're watching XLV for a daily higher low. We'll be keeping an eye out on first hourly oversold conditions, which are approaching. And again, just like SPY, hourly trend changes back to the bulls needed for daily higher lows to be established. XLF, daily bull flag confirmed. Blue sky breakout. It's been a long time to get back to that high. And actually, I got to double check 2008, but I do believe we're over that. Yeah. So all-time highs. And didn't clear it by a lot, only 11 cents, but bulls have space. Our line in the sand level is now 30.49, and they want some green tomorrow to get a bit more convincing follow-through on that all-time high. Biotech, daily higher low at 145.75, and the bulls are going to try and break 152.12 and 152.70 to try and see a new all-time high. You could call this a little cup and handle pattern with the all-time high resistance, failed to break it. There's your bull flag. We would need increasing bull volume tomorrow and a move up to 152 beyond if that's going to be a daily cup and handle example. The semiconductors hit a new all-time high. Again, not a lot of follow through, but a higher low every single day for the last 9 days. When that pattern breaks, tons of space for the daily higher low to look to form. Tan is still scouting a daily higher low, needs to shape up that hourly trend change. And we had the low of yesterday, high of the bounce, higher low here. And if bulls break 117.09 tomorrow, our daily higher low will be set and we'll be looking back up at resistance. MJ, new all-time high, but not a lot of follow through there. I did actually exit some position today, just being protective. I'd rather leave money on the table than give back any gains. It's been a nice start to 2021, and 40.62 is the most important support level there. And other than that, everything is in daily uptrends as far as major sectors are concerned. So we know the bulls have control as long as that is the point where we are at. The VIX, anything under 29.20, just a lower high. So watching this tightening range, most important levels to me are 29.20 resistance and 21.40 support, but certainly not showing a lot of strength on this chart. The dollar. Got a hair in my mouth. So the dollar is topping out, it looks like. 91.02 and 91.24 were resistance levels that we have not broken yet. So still counting this as just daily lower highs. And it's up to the bulls now if they're going to prove something to us into next week with, I guess we got 3 trading days left this week, but we're looking for a higher low compared to 89.20, and then we would have to break 90.73 to confirm a daily trend change if we're going to see a notable shift in momentum. Look at these EMAs, the 12 and 26 period. The last time they crossed bullish, they did cross bullish here with a little bit of a fake out, but it has been 2.5 months. So that'll be notable to us if the bulls can change the daily trend. Gold broke its 4-hour tightening range bullish, but not a bunch of follow through, not much at all. And that keeps a daily bear flag alive. We have to break the high of this bounce. Again, the size of the bounce tells us what's more likely, a bear flag, or if it's a big enough bounce, an equilibrium. And we can use fib retracements. Again, I don't do this. I do it visually through 10 years of experience. But if I'm teaching other people, fibs is the easy way to do it, where we look at the retracement, the size of the bounce. If it's under the 382 level, bear flag remains the more probable scenario. If it gets up beyond that to the 50% or beyond retracement, that's when we start scouting an equilibrium. And of course, the higher you go, the more favorable it will be for the bulls. So at this point, for both gold and silver, we are seeing potential daily bear flags unless we get bounce follow through. Silver is back at the high of its bounce, so holding on a bit better, but gold has work to do. With that, the miners trying to set their daily higher low. They had a nice strong close, it looks like. Decent bounce there. So again, the hourly falling wedge-like pattern where the bear breaks are not getting much follow through. And just watching these resistance levels, and the resistance levels aren't even that clear. I'm just looking at highs of these bounces. At 36.56 is a resistance, 36.28. Anything under 36.28 I would just call a lower high, but it is worth watching these miners to set up the hourly trend change to try and get a daily bounce going. And this is certainly a bullish reversal candle on the daily today. Have to follow through with it tomorrow, and then we will scout a daily lower high, anything under 38.66. Oil still all bulls. Daily higher low every single day since the news of production being scaled back from Saudi Arabia came out, and that was just a bull catalyst. And again, a lack of resistance here. We're at the last resistance that is clear, 53.60, and after 53.60, it's 54.79. Plenty of space for a daily higher low when this move tops out, and the energy sector benefiting on this oil move as well. Natural gas, not the ideal follow through. We started the morning great for bull follow through, but by the end of the day, now we have a lot of profit taking. So we got solid follow through. We broke 285. 4-hour time frame though, too much pullback for the bulls to be comfortable. And again, the size of the retracement, we can measure with fibs. We look at the low of the move, high of the bounce. We pulled back 60%, which means rather than favoring continuation, if it were 38% or less for the bull flag, we look at an equilibrium as the more likely scenario, scouting a higher low compared to 2587. And the most important line in the sand daily level is 2587 to try and keep this daily uptrend going for the bulls. Other than that, Bitcoin still tightening up, watching for a daily higher low to form there. Again, that's where my trading has been the last few days, with a lot of volatility, and watching for the inside bar to form here, and then the direction that the inside bar breaks will be key. And we'll be watching for a daily lower high if it breaks bullish. And if it breaks bearish, we'll still be very extended, so I'll be interested in watching for bounce plays. Other than that, I'm in a couple swing trades. I didn't do much trading today as far as day trading, but I like ZM. Finally trying to find a bottom. Bigger picture, we're looking for a monthly higher low. We had a gap to fill, which we filled in extended hours. We didn't fill in regular trading, but we know we're looking for a monthly higher low. We've pulled back at this point from the all-time high 44%, and we just saw a bear break of 336.10 with no follow-through. Bulls bought the gap down open for a bullish engulfing candle, increase in bull volume. There was some notable options activity for the bulls on ZM. So that's just enough for me to say, great, I'll play off that low. If it's our monthly higher low, I'm going to have great risk reward. If it's not, I'll stop out on a break of 331 and it'll be an acceptable loss. So in that swing position, I want to see a break of 365 tomorrow to break the daily lower high and a nice strong close. Other than that, I'm also in an XL swing position. Didn't close as strong. It's playing off of that 1975 bottom. Essentially need an hourly, or I should say a daily higher low compared to 1975. And we need a bull break of 23. This one is not shaped up as well. We would need to see bullish continuation. 2197, 2180, two resistance levels that have to break. So scouting, can we change that little daily trend? And again, I'll stop out if 1975 breaks. Other than that, Fubo bulls finally showed up. Gap up open, there's your bull volume, getting over the double top at $30. And finally, a notable shift in momentum, putting pressure on some shorts. So now we zoom out and scout a weekly lower high. But finally, a shift in momentum. And you can see this little daily move. Big bull move, big bear move, and then this little daily move. It's exactly what XL bulls are hoping is going to happen. Big bull, big bear, trying to build the base, need that shift in momentum. So those are just a couple plays that I'm keeping an eye on. DDD has been great. Top fish first thing off the high of yesterday. And now we're watching for these inside bars. And if they break bearish, we'll be watching first hourly oversold conditions. We'll be watching for a daily higher low. Tesla had a nice first hourly oversold bounce from all-time highs. Only downside is it happened right at the bell yesterday. So you pretty much had to buy in and then hold it as a swing trade, and it would have certainly played out very nicely, but just not ideal conditions, as I obviously would rather have that play out during regular trading hours. But just another example of the back burner trade working well. Still certainly plenty of volatility out there and a lot of names. Pen bulls, all-time highs continue to rage. And we're now looking towards potential Inauguration Day stuff, headlines, maybe some fear, and earnings. Hope you had a good day. Appreciate everybody letting me know about the audio not matching the video. I've got a desktop coming in a week or so. I've been trading on a laptop for a decade. And now that I'm finally not traveling everywhere and trading while traveling, it's time to get a desktop. So we're going to get the whole 9 yards with a webcam and speakers and all that. So that'll change eventually. But I appreciate the heads up. It's also the lighting. The market closes and it's getting dark. I cannot wait until my sleep schedule and my body clock is aligned with the market in the spring and summer. We're getting there. Thank you.